Good morning. Welcome to Trading Hour. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I am Reema Tendulkar. With me is Vivek Iyer. And it's a terrific Tuesday morning as Donald Trump dials back on some of the reciprocal tariffs, at least on electronic goods. He sounds hopeful on autos. Global markets are cheering. Wall Street, as we've been pointing out, two back-to-back sessions of gains. In Asia this morning, you've got green on the screen for a Nikkei, Kospi, the Taiwanese markets. It's only the Hang Seng and the Chinese markets which are a bit subdued in trade. So those markets are flat. But look at the Indian markets over the last 2 hours since opening. Absolutely strong. 475 points up on the Nifty. The Nifty is now above 23,300. The Sensex is advanced nearly 1,500 points. Mid-caps participating. Solid advanced decline ratio. 10:1 in terms of an advanced decline ratio. So many sectors doing well. Banks are higher, auto is higher. Autos, of course, leading. But you've got realty, you've got defense, PSUs. All these sectors are like turbocharged.
Good morning, and absolutely nothing to complain about this. This Tuesday, it's a strong screen, broader end of the markets, the advanced decline ratio, very, very strong. Let's have a look at some of the individual names that are doing very well. Like you mentioned, banks are leading the charge today. Within the banking pack, have a look at HDFC Bank. Lending rate cuts, followed by also deposit rate cuts across the banking pack. HDFC taking the lead over there, and that particular stock leading the entire sector higher. All of the banking stocks today doing very well. Names like Axis, Bandhan, IndusInd, in fact, have almost 7% today. So that's a significant up move that you're seeing there. You mentioned auto and auto irons. There is softening as far as the stance towards tariffs are concerned. So names like Tata Motors, remember Tata Motors had actually paused shipments of JLR to the US market, so that's doing very well. Bharat Forge, Motherson, Sumi, as well as Sona Comstar, all of them who have exposure to the US market doing very well. And Realty Pack doing very well today. They are rate sensitive, remember, and along with that, some positive news in terms of macro tech developers. That also is aiding the up move. Macro tech amongst the top gainers within the Realty Pack. The pack itself is up close to 5% today. So the rate sensitives, especially in today's trading session, doing very well.
Okay, let's find out how you should trade this market then. Mitesh Thakkar is now with us for a quick technical check on the markets. Mitesh, we haven't had even a little bit of a dip for someone to enter into. It's been a gap up opening and we've held on to all those gains. So what does one do in today's trade?
That's correct. I think on the index, we've not seen any kind of weakness. Just a mild, 70-80 point from the day's open and high. But my belief is that, you can still fish for stocks which are showing some kind of reversal patterns are giving you a good restore and deploy. And so you on the Nifty, before I go to stocks, on the Nifty, I think 23, 350, 400 was one of our target area. I think that's in May. We got a hit financially 368 or so. And the next target will be 23, 600 and then 23, 750 to about 800.
Okay, Mitesh, and your individual stock picks in today's trading session, anything you'd like to chase?
Yeah, I would, want to have a long call on Tata consumer. Sorry, just a minute. Yeah, sorry, a long call on Tata Technologies. And that's where, I would recommend buying. And these are spot level because the futures are trading on discount. So Tata Tech is a buy with a stop at 639 for a target of 680 in spot. And the other stock which I like is OFSS, which I would recommend buying with the stop just below levels of 76.20 and a target of around 79.10 can be.
Okay, that's Oracle Financial Services, a stock that Mitesh likes, OFSS. Yeah, you wanted to say something?
I was just talking about how he's talking about the mid-cap IT name. So that's what he's liking today, a very sharp bounce back. But one particular space that we are looking at is the banking pack. Remember, HDFC Bank has reduced savings deposit rates by 25 basis points. Abhishek joins in with more details.
Well, in a declining interest rate scenario wherein, bankers are wary of the fact that they might lose out on net interest margin, HDFC Bank has gone ahead and, cut down on the saving deposit rates by 25 basis points. So first time they have cut saving deposit rates since June of 2020. So saving deposits below rupees 50 lakh will now get 2.75% versus the earlier 3% rate that they had. And above rupees 50 lakh, they'll get 3.25% from the earlier 3.25%. 2.5% that they had on these accounts. So, you know, this is now one of the lowest rates that you are seeing in last few years on saving deposit rate. The lowest saving deposit rate right now in India is offered by SBI at about 2.7%. Now, analysts do say that incrementally the net interest margin accretion could be anywhere between 5 basis point to 8 basis point, given the fact that these rate cuts in saving deposits have taken place for HDFC Bank. Back to you.
Thank you very much for that. That's been a big force behind today's up move, providing that support. Let's talk about autos, because auto stocks like Samvardhan Motherson, Sona BLW are in focus. US President Donald Trump says he's considering a modification to the 25% tariff on auto imports. He wants to help the auto industry. Sudarshan is here with the details.
So while market is seeing an all-round gain, one sector that is the biggest outperform is the auto. All the stocks are higher, somewhere in the range of 4 to 9%, and two stocks especially that are seeing big gains are Samvardhana Motherson and Sona BLW, and it's on the back of softening of stance related to auto tariffs by Donald Trump. Over the weekend, he has announced that he is considering modifying 25% tariffs that were announced and that came into effect on April 3rd. And it was basically for the imports from Mexico and Canada, because he believes that US companies need more time to implement these tariffs. Now, why this is positive for both these companies, Sona BLW and Samvardhana Motherson? So basically, Mexico and Canada contribute in the range of 30 to 60% to US sold vehicles. And for GM and Toyota, it's in the range of somewhere around 30 to 40%. And for Volkswagen, its contribution increased to almost 60%. And Samvardhana Motherson is one of the biggest suppliers to these companies, and that's the reason it's positive. And for Samvardhana Motherson, 4% revenue contribution comes from Mexico. And for Sona BLW, Mexico contributes around 2 to 3% to its total revenue, and that's the reason it's positive. But apart from auto tariffs, one more positive for Samvardhana Motherson, it's related to electronic products. The news flows have been going on around the tariff exemption or tariffs coming in, and as per Nomura, India has exported electronic products, especially smartphones, worth $11 billion in 2024. And Nomura believes that Motherson, in partnership with BIL, is a supplier to displays to Apple. And because of that, it might impact positively to Motherson. Apart from Motherson, it can also be positively impact Dixon, because Dixon has manufactured 11.5 million units for Motorola in FY25, and Nomura believes that overall it has factored in 50 million for FY26 and 65 million units of smartphones by Dixon in FY27. So considering all the factors, you are seeing positive move in these names.
Thank you very much for that. Mitesh was talking about mid-cap IT, particularly names like Cyient, KPIT Tech are having a good session. Remember, these are not the typical IT services companies. They're engineering R&D companies. And they've had a big free fall. In fact, you should pull up, Cyient, KPIT Tech, Tata, LXC, how much they've fallen from their 52-week highs. And they're all off 40 to 45%. Now, Ambit has a note, and they say that they like Cyient and KPIT Tech. And this is premised that because the stocks have corrected so much, the current market price or the valuation implies a certain growth rate, right, for the next 10 years. And that growth rate for both Cyient and KPIT Tech is lower than the historical growth rate, which basically means it's possible perhaps for the companies to achieve it, right? So now their implied revenue growth rate for the next 10 years, FY24 to FY34, for Cyient is just 2.9% after the correction, which is lower than the 4.6% growth that they've seen in the last couple of years. Similarly, for a KPIT Tech, the current market price or the valuation implies KPIT Tech will grow at 13.5% top line for the next 10 years. Again, lower than the historical growth rate, which gives you greater confidence that the companies will be able to achieve it. But when it comes to other companies, say for instance a Tata LXC or a Tata Tech, these two companies, the ask rate which is implied is higher than the historical growth rates. And for companies like Persistent and Coforge, given the valuations even after the correction, the valuations imply that these companies will need to grow at 20% top line growth for the next so many years. Is that achievable? Well, it remains to be seen. But Ambit has a buy call on Cyient and KPIT Tech, because after the current correction, these stocks, the ask rate appears to be far more palatable compared to the others.
Very interesting link there as far as mid-cap IT is concerned. But one stock that I'm focusing on today is GMR Power. Remember, this particular company is from the GMR group. We generally talk about GMR Airports, but GMR Power too quietly has gone about, especially in the last year, going ahead and addressing significant leverage issues that the company had. Remember, at the end of the March quarter, the company informed the exchanges that as far as certain subsidiaries are concerned, they had reached a one-time settlement with lenders. Now, yesterday, there has been a further update from the company to the exchanges, where the company has gone ahead and divested stake in 3 non-operating as well as stressed assets, and the divestment has been done to a private equity firm, which was in most of the cases the existing partner in these 3 assets. So the total consideration for all of the 3 assets that the company will be receiving is a little over 650 crore. The first asset is GMR Bajoli Holi hydropower plant, where the company actually operates a 180 megawatt hydroelectric power project. Close to 80% stake is what the company will be divesting. The other plant is GMR Vemagiri Power Generation. Again, 51% stake will be given to Synergy, and it's closed to 388 megawatt natural gas power plant. The third asset that the company is divesting is GMR Rajahmundry Energy. Again, a 768 megawatt natural gas based combined cycle power plant. What was the issue with the power plants, especially as far as natural gas power plants was concerned? The company did not have access to low-cost natural gas, on the back of which operating these particular power plants was leading to increased operational losses. So what is it that the company says? The company says post OTS and post this particular development, they will be able to delever the balance sheet by close to 4,400 crores. Along with that, the move will help spin off the non-operational gas plants as well as the stressed assets. And remember, Synergy Capital is the private equity fund that goes ahead and has eventual ownership of Synergy. A positive development for GMR Power, close to 10% higher today, Rima.
Okay, big moves in so many individual stocks. Let's talk about Devyani International now, Interglobe Aviation and Ajanta Pharma. Here, there are some brokerage notes which are coming through. Hormis is here with the details.
Some interesting upgrades and initiations as well. Devyani International has been upgraded by Kotak. They've upgraded it to a buy. Earlier rating was an add. The target has been raised to 190 from 175 that was earlier. And they like the stock. They're expecting FY26 to be a better year for Devyani International because of a pickup in same-store sales aided by a lower base, a better execution profile, and some improvement in underlying demand as well. And what they also say is that KFC's market opportunity, strong brand equity, and under penetration in India, the optionality of other brands, the RJ Corp's appetite for portfolio augmentation, and their track record for creating shareholder value are some of the key factors what is driving their upgrade for Devyani International. The stock up 5% as we speak. And for Interglobe Aviation as well, Motilal Oswal has gone ahead and upgraded the stock to buy a 65.50 price target here, saying that benign crude prices, favorable domestic demand bode well for the airline, and they are also expecting a 28% and a 38% EBITDA and profit CAGR over FY25 to 27. And this flip that you are seeing in India's domestic aviation will continue to bode well for Indigo going forward. And lastly, Jefferies has initiated coverage on Ajanta Pharma and has a 28.50 price target, and with a not significant upside though, but they're saying that they're getting 70% of its revenues from the high entry barrier branded generics market of India, Asia and Africa, and they are here too expecting a 19% profit CAGR over the next 2 years. So positive notes coming in for a lot of for these 3 names, and the stocks doing well for themselves today as well.
Thank you so much, Hormaz, for joining in and talking us about all of the individual stocks as far as what brokerages are saying. But as we now slip into a short break, here's some good news for our viewers. India's business news leader is now just a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen. Welcome back to Trading Hour. Well, let's now shift focus to the commodity space. Manisha joins in, and today you're focusing on gold, right?
Well, it's another week where we are looking at the gold price holding above $3,200 an ounce. The all-time has been at $3,250. So while we've come off those kind of highs, but we still are holding quite firm. Another week and a stronger week starting on for the gold prices. If you look at the last 1 week, we are up by nearly 5%. And in this year until now, it's 23% of gains that the gold prices are working with. Well, support continues as there's a lot of uncertainty even now with what way the US tariffs and the retaliatory tariffs are headed on. Importantly, the US has launched national security investigation when it comes to sectors like pharmaceuticals and semiconductor imports, and that is what has led to some more premium coming in for the prices. Apart from that, there also are various statements from the Fed officials suggesting that the US will perhaps need to cut rates sooner if the tariffs continue to remain where they are. So all the scenario is positive for gold. The latest one to now increase their forecast for the gold prices is Goldman Sachs. They say that $3,700 an ounce is what they are looking for gold prices now, and in an extreme kind of a situation, $4,500 an ounce by the end of this year is also a possibility. So I'm only talking higher numbers from here on, because Bank of America, for one, is talking about $3,350, Deutsche Bank at around $3,200, and then $3,700 on the higher side as well. You have $3,300 and $4,500 of a range coming in from De Beer as well. And then we have that headline of a number coming in from Swiss Asia Capital, talking about $8,000 an ounce for the gold prices by year 2028-29. So bullish cues continuing for gold, and higher targets as well continue.
Thank you so much for joining in and explaining to us what exactly is transpiring as far as the world of the yellow metal is concerned. It's been on a roll this year, and target prices being taken higher by most of the brokerages. Well, let's look at the markets themselves. The advanced decline ratio was very strong at the start of this year. It's actually improved further on. What's aiding the kind of market rally? Have a look at some of the auto stocks. Tata Motors, Bharat Forge, Motherson Sumi. Now what's actually joined the pack is Ashok Leyland. All of these stocks doing very, very well in the session today. What's not doing so well are actually some of the OMCs. In fact, names like Hindustan Petro, despite lower oil prices and despite what's actually transpiring in the broader end of markets where there's so much strength, names like Hindustan Petro actually trading near the day's lowest points. Reports are indicating that there could be some negative news in store as far as Allied Blenders is concerned, and Allied Blenders, that particular stock is now down almost 6.5%. We'll have to wait and watch by as to what exactly is the negative development there, but that's a particular stock now trading at the day's lowest point. Some of the other stocks in focus, remember, Havells opened the day lower. It saw a sharp intraday dip, but post that, that particular stock has recovered very sharply. Havells almost 1.5% higher. Remember, the company has gone ahead and made a 600 crore investment as far as the renewable energy subsidy is concerned. But with that, it's all the time we have on this edition of Trading Hour. Stay tuned. Halftime report is done next.